A new category now which has opened up is called a Algo Service Provider.
Okay.
Who is Algo Service Provider? It is like a fintech. Who is not an investor themselves, but they are good at identifying the opportunities, write new logic, define new strategies. So those are the people who will come out with more and more logic, more and more strategies, and then can offer it to the investors to use it.
Hello everyone and welcome to Market Pillars Uncovered. I'm Avanne Dubash. Here is where we uncover the real engines behind India's financial transformation. Our guest with us today is Mr. Manish Ashar. He is the owner of North Star Consulting and has over 3 decades of experience in system audit experience in the financial markets. In fact, he's worked with some of the major stockbrokers in the country and has deep expertise in system audits, security audits, trading technology, architecture, and related regulatory frameworks. In today's episodes, we are going to deep dive into algorithmic trading, talk a little bit about how it's really altering and changing the landscape of financial behavior, what the regulations are, the risks, how you can participate, and so much more. So thank you so much for taking the time out and being with us. I just want to talk about your expertise because you've had it and you've been, deep in, with a journey and a rich understanding of algorithmic trading for the past 20, 30 years. Just tell us a little bit about your professional background and how you got started out.
Wonderful. So I'll put into perspective that for 3 capital market, correct? We had been active for the last 20 years for various compliance related to system audit, cybersecurity audit, and variety of other things which is required for a stockbroker as mandated by the exchange and the SEBI. And we had been conducting system audits, cybersecurity audits for many of them for quite some time. Also, we had been giving our opinion whenever a consultation paper comes from SEBI. We give our opinion and that helps them to formulate the policies and variety of other procedures.
So for the layperson, for someone who absolutely doesn't understand, if you had to explain it to a 10-year-old, how do you explain algorithmic trading?
Okay, so algorithmic trading by itself means that you have something which trades without a major intervention of a human being.
Okay.
It trades on its own. So I would bifurcate in wider areas. One is an algorithm which is a execution algorithm, where you set parameters that at what point of time, at what rate, what to buy. You set into the system. Now let the system operate on its own. Once it reaches the given kind of parameters, it will execute the order, whether it's buy order or a sell order, and that is called execution algorithm.
Okay.
There's no much intelligence given to that, but parameters are given, set parameters. Once the system encounters market is meeting those parameters, it will place the order. The other side of the algorithmic trading is a system which has a logic built in, that it tries to understand what is the market scenario happening like. Now, depending on the market scenario, it will take its own decision to buy or to sell. Now, this system is an intelligent system which works on many system parameters with a logic, with a lot of back testing. It has the intelligence built in. Now, there is an intelligent algorithm. We call it decision-making algorithm. That system works on its own without a major intervention. The dealer can keep a track of it, but the system would take own decision to see if there's a good scenario, there's a good opportunity, it will perform a trade. So there is a execution algorithm and there is a decision-making algorithm.
Okay.
2 major sides of it.
Okay. So take us back to it. When did all of this really begin in India? What was the investor response to it, the regulatory framework back in the day, and how has that evolved?
Wonderful. So, algorithm trading as such was there from almost 2005 onwards, but it was only for the institutions. Later on, a lot of prop desks started participating into it, and it really make the market very large for them. So you had prominently institution traders and the prop desks participating to the algorithm trading. It brings to the scenario that since everybody is trading, even the retail investor had a kind of interest of participating as a algorithm trading. So of late, there's a lot of participation happening. It's surging now from the retail investors also, that they want to identify what are the kind of algorithms which can help them to make kind of a profitable trade for them, and they have their own tools to perform those kind of trades now.
So now that we understand better what algorithmic trading is, can you just walk us through what are the different types?
Okay, so as I told you,
Yes.
one was the execution algorithm,
Yeah.
which performs trade based on your set parameters. Another one is the decision making algorithms, which has a program logic and would take a decision on its own.
So what's
to perform
more
a trade.
commonly used, or what are the strategies that are commonly adopted?
So there are a lot of strategies, like you can have future to future arbitrage.
Okay.
You can have multiple exchange arbitrage. There are a lot of algorithms. Some of them are pre-approved by the exchange. What happens is basically anybody, vendor, end panel vendor, develops a strategy. He gets an approval. He applies to the approval to the exchange, and the exchange gives an approval. That becomes a authorized strategy, approved strategy. And there could be a lot of strategies which could be developed in-house by any broker, and they will take the approval from the exchange, which will remain an in-house strategy.
Okay.
So there are a lot of strategies which are pre-approved by the exchange, and any vendor can develop the same logic and give it to their brokers, subsequently used by the investors.
Okay.
Or if a broker wants to come out with their own unique logic, they will build up that kind of logic, showcase it to the exchange, and take an approval, and let brokers and subsequently the investors start using those in-house strategies.
Okay. So I'd imagine that in 2005, were the regulatory authorities, were they very receptive to this? Tell us a little bit more about what the overall regulation framework is for algo trading.
Yeah. So in 2005, the algorithm trading was very rare, not being used by many brokers, not being offered by many software as a platform. There were quite a few restrictions that in which condition algorithm trading can happen and which situation algo trading should be stopped. Scenario was that if the market is down a certain percentage, then the algorithm trading has to be stopped. So there were quite a few restrictions in the beginning. Now the markets have opened up, the regulators have given kind of a wider opportunity to the brokers. Now they are also finding a way how to allow the retail investors also to come out with a way that they can do algorithm trading with a right platform. So there was a circular for safeguarding interest of the retail investor in algorithm trading. Subsequently, they have come out with a fairly broader guideline that what kind of strategies would be allowed, what should be responsibility of the exchange, of the broker, of somebody called algo service provider, and of the investor. It's a kind of a very good effort from the regulator to define roles and responsibility of various stakeholders, giving them a kind of a guideline what they should do, what they should be careful of.
Yeah.
And now this is now opening a new era for retail investors for now.
Yes.
So far, there was no regularized platform for them to perform. Now exchanges, the regulator is now making it very much framework driven opportunity for them.
They've made it more favorable.
More favorable for
Yeah.
them.
I also wanted to draw your attention to the latest SEBI circular that has come out, because that I believe is going to be quite game changing. Although it's not yet been implemented, what are the guidelines and when do you see it actually being implemented?
Perfect. So SEBI has always been trying to see that there's a lot of interest of the retail investors to participate in the algorithm trading. To facilitate the right way to participate the algo trading for retailers, SEBI had come out earlier with a kind of a consultation paper. A lot of people have given input. This February, that is February 2025, SEBI came out with a guideline that how a retail investor can use a platform to participate as a algorithm trading. It was to come with the clear picture for the 1st May that they will give a better, clear guideline. So on 5th May, they have come up with slightly more detailed version of the circular. Now, what this guideline means is basically that there are going to be multiple stakeholders. The exchange, the broker, the investor, and somebody called Algo service provider. They have set kind of a roles and responsibilities for each of those stakeholders. A retail investor who wants to do a trade using algorithm platform, and he expects that his orders will be more than 10 orders per second. So that is a threshold limit that the regulator has set.
Okay.
That if a retail investor wants to send more than 10 orders per second, that is OPS, 10 OPS, then he is required mandatorily to request his broker, who in turn would get the algorithm approval from the exchange. So now this is going to be a stage where the registration of such algos will open up. Each algorithm would have something called a unique algorithm ID, Algo ID.
Okay.
So when a retail investor is passing an order, he has to ensure that the order carries the Algo ID to the exchange. So exchange knows there's an Algo order coming up. Correct. So a retail investor can write his own logic, but he has to take a approval from the exchange. He'll get in turn gets the Algo ID, which has to pass in each of his order. Brokers will also offer a lot of strategies to the investors, traders. Even those, each of those strategies would have a unique Algo ID. So each order is now required to identify whether it's an Algo order or not. It was there earlier for the institutional and the prop desk. Now, even the retail order, which is Algo, will go with the identification, the Algo order. And which specific algorithm ID, that also goes into that. A new category now which has opened up is called a Algo service provider.
Okay.
Who is Algo service provider? It is like a fintech, who is not an investor themselves, but they are good at identifying the opportunities, write new logic, define new strategies. So those are the people who will come out with more and more logic, more and more strategies, and then can offer it to the investors to use it. Now, exchanges made, the regulator is making them also responsible, because since they are defining the logic, regulator wants to make sure that nothing goes wrong in their logic, which can affect the market in turn. So even they will be registered with the exchange, that they are now responsible for writing the logic of it. Now, if the order is going from the Algo service provider, it's not going directly from the investor. Investor is using the logic of the Algo service provider, and the Algo service provider server sends the order to the broker, and the broker will send that order to the exchange. Now, regulator has kept into mind that identity and authenticity of the Algo service provider should be ensured, that nobody can just push the order to the broker directly. So, exchange has requested that, mandated that each Algo service provider has to connect to the broker with a unique IP, a static IP, which is whitelisted at the broker's end.
Okay.
So broker is sure that this order is coming from a authorized Algo service provider and not anybody else. Now, when this becomes, there are going to be a very specific Algo service provider who are registered with the regulators, and now passing the orders to the broker. Now, bringing it like a close synergy between them. It's a closed ecosystem that trust is there between broker and the Algo service provider and the retail investor.
Absolutely.
So there are going to be two kind of strategies. One is basically a kind of a white box, we call it, where the logic is published, it's known to everyone. There's going to be a black box strategies where the logic is not known to others. Correct. So there are two kind of this white box and black box strategies which will happen.
Okay. So how much of a game changer will this be, and what more would you like to see happening from the regulators front in order to improve the landscape for algo trading?
So till the time the retail investors who did not have a right platform or right framework to push their algorithm orders, they are getting the major opportunity for the first time and in the right perspective.
Yes.
Correct. There are no gray areas anymore. It is very clear guideline how they can participate. Looking at the new set of young investors who are coming into the picture, correct? It's going to be a large set of investors who will now start doing the retail algorithm trading now.
Okay.
Correct. So we see a great opportunity for them with the right regularized framework for them.
Okay. So by and large, take us through the evolution of it. Is it still more for institutional investors? Are retail investors still participating a lot in algo trading? How has it grown or how much from 2005?
So institutional and the prop trade, they have an advantage. They come with a large quantity of orders.
Yeah.
The volume what they generate is very large. So they are predominantly dominate the algo trading scenario. At present, while there is no clear statistics from the exchange or from the regulator, it's very well to assume that around 45% trade happens on algorithm trades in the whole volume. So that is predominantly coming from the institution and from the prop desk. Since retail algorithm platform is yet to be regularized, you don't know their real level of participation at the moment.
Okay.
But given the kind of regulation which is coming up, we would have clear statistics about the institutional and the retail participation later on.
Okay, fair enough. Given that it's so heavily dependent on technology and no real human intervention, what are the kind of risks that are associated with algo trading? For someone who doesn't know, is it for a certain kind of investor, and what are the risks?
Perfect. So I'll put in right perspective that the risk is enormous.
Okay.
Because you are working with a large volume. One has to identify that the algorithm what they have developed, the strategy what they have developed is taking care of all possible risk management aspects. That if there's a loss happening, where it should stop. If the algorithm dysfunctions, how it can be controlled, how it can be stopped. We have seen certain instances in past where algorithm trading has misbehaved and has led in a enormous loss for particular set of
Can you
brokers.
share an example? Have there been cases or something noteworthy?
It would be like naming certain entities.
Yeah.
Correct. I will avoid naming those entities.
Fair.
But two instances were there typically where the market was pulled into a specific direction because the algorithm misbehaved.
Okay.
Later on, SEBI and the exchange had to find a way how to adjust the losses which was faced by multiple stakeholders and then to get everything into the right place.
Okay. So, can you share any statistics? Can you share any trends as to what algo trading is like in India? What are, do we have things like this overseas? How do we compare?
Perfect. So, as I told you, India has somewhere around 45% algorithm trading volume generated every year. Internationally, it is safe to assume that around 80% trades are happening through algorithm. Abroad, it's much more higher. We are reaching to that kind of a scale now.
Okay. Do you see the penetration of algo trading, which is already so high overseas, only increasing further? What's your projection?
I would say about India
Okay.
that yes, there's been institutional prop desk doing a heavy amount of algorithm trading. But if you look at last few years, a lot of young investors are coming into the trade now. They have learned how to do algorithm trading. They are trying to participate with whatever platform is available to them right now, and it is increasing in a good way. The way now the SEBI would come out with the retail participation with the right side of platform, we would certainly see a lot of growth in the retail participation also.
Okay. We often hear terms like co-hosting, co-location, tick by tick. Can you explain what exactly that means?
Okay, so there are some of the technical jargons
Yeah.
that typically capital market has, like HFT, high frequency trading, colo, you have something like LLT, there is low level latency, correct? So, various such terms are there. HFT stands for high frequency trade.
Okay.
What happens is that you want to perform a big order, lot of orders in a few seconds, correct? The game here is basically how much trade you can process in least amount of time. That is where the challenge remains. So HFT enabled system allows you to push a good amount of trade in very less time, fraction of time in milliseconds.
Okay.
It would push many orders, get those orders executed, so there is more kind of a volume generated, more trade generated, more profit generated.
Okay.
So that is what's said for the HFT.
Okay.
There is another term called low latency trading, LLT. When a server of a broker is sending an order, it reaches to the exchange. There is a few milliseconds which is being used to transmit the order from the server to the exchange. Now there's a game to reduce that transmission time, even though it's in a millisecond.
Yeah.
So earlier, the broker used to keep their servers in their own office, and there was a lease line which would connect to the exchange. The order would transmit from their office to the exchange. Now, a server sitting in Mumbai, reaching to the NAC in BKC Mumbai, has a shorter time. A server in Delhi, reaching to the NAC Mumbai, has slightly more fraction of time.
Yes.
So people started preferring putting their server in Mumbai. Then they started going near the exchange premises to even reduce the fraction of the millisecond.
Yeah.
Correct. And lastly, the exchange started giving something like colo facilities. Colo is a short form for co-location.
Okay.
What is co-location? Basically, exchange allowing brokers to keep their server into the exchange's premises, in exchange's data center. So the proximity is very less. Secondly, when you are working with a lease line, when you're working with the server in the office, you have to use a lease line.
Yeah.
So you had a modem on the broker's end, modem at the exchange end. So even the fraction of milliseconds would go into modulating, demodulating the data.
Okay.
Now, since you are sitting right into the data center of exchange, that modem is not required. You have direct connectivity.
Yeah.
We call it DC, direct connectivity. And now there is no need of modulator, demodulator, there is a modem. So that fraction of milliseconds is now reduced. You get the data much more faster now. So that adds to the speed to you.
Okay.
Lastly, you said TBT.
Yes.
That's called tick by tick data. A normal trader, when doing a trade, a dealer sitting in the office of the broker, or maybe an investor doing a trade using internet-based trading or mobile trading, gets the price update at a particular frequency, which is not very fast. It's like called a snapshot. In 1 second, they get a snapshot and they see the price.
Yeah.
But when you are using the TBT,
Yeah.
you get a tick on every bid, ask and trade. So you have very real-time data available to you. Now even that millifraction helps the HFT, LLT much more to identify that what is the trend happening,
Yes.
what are the different price level at which there is a bid and ask. And they are able to take much more better decision
Yes.
to trade. So that is called TBT.
Okay.
It's called tick by tick.
OMG, that's my takeaway from all that you're telling me. But you know, with the advent of technology, we're seeing everything really pick up, the scale that we have seen. How is that enhancing algo trading, and how do you see it further leveraging the growth of algo?
So, as I told you, there are multiple kind of strategies. Initially, there were few strategies, and with more creativity, more learning, more logic, brokers and the investors building up more and more logic to find different ways to make profit.
Yeah.
It's not if I found a way to make better profit, one is known to more people, they build up the same logic.
Yeah.
So everybody is the same league. So one has to now differentiate, find some better way to make profit. And once they find out a new way, they make more profit, they generate better trades. Slowly, others get the idea of that logic, they build up their logic. So it is a continuously evolving innovation kind of is happening continuously.
Yeah.
Now, when the retail investors are going to be given a right platform to do the algorithm trading, they will come with a variety of strategies of their own. So we are going to see a lot of innovation in that area.
Okay. Absolutely. We spoke about the risks associated with algo trading. If you could list down the main advantages of algo trading, what would they be?
So there are few things which have two sides of it. Correct. With the algorithm trading, we have been seeing a lot of volume being generated. Now, when there's a lot of volume generated, a retail participant gets a good liquidity. If he wants to buy or sell something, there is somebody on the other side with a large volume to offer the other side of the trade. So that is the advantage. The flip side is basically the algorithm trading has a lot of data points available, as I told you, tick by tick data. They can identify a better way to see the market trend, and they can perform a trade in a very fast manner, in which a retail investor cannot. So it's always that the algorithm trading will generate a lot of profit, lot of trade, and make money for themselves. Retail investor, since is working with a manual entry, will not get that kind of execution faster.
Okay.
What he gets is basically a better liquidity.
Okay. You spoke about the risks associated with algo trading. How can a retail investor better protect themselves against some of these risks?
Perfect. So retail investor will work with some algorithm strategies which are developed and put into the operations by a broker. There will be some retail strategies which might be offered by a algo service provider, and there will be some kind of algo strategies that an investor would design themselves. Correct. So the investor needs to know which is the right strategy for his particular purpose in a specific market scenario. So one has to take an informed decision that what I should use at what given what of time, given which point of time. It's like, if you're now playing golf, there are many sticks given to you.
Yeah.
You need to know which stick to use when.
Exactly.
Correct. So there are many strategies available.
Right.
You need to know when to use which strategy. That's going to be the kind of things that a retail investor must ensure for themselves.
Okay.
For that, he has to learn the nitty-gritties of the algorithm trading, the logic, and what can safeguard his interest, which can make more benefit for him, and how to take action against any risk that he is facing.
Okay.
So it's going to be a lot of learning that he has to do. It's not like off-the-shelf product you buy and then you start using it.
No.
You have to research what is suitable for you, select that, and then put it into the operation for yourself.
Absolutely. So that research and that homework is very integral. Are there any myths about algo trading that you want to bust? Anything that people think it is all about, but it's not really?
So algorithm trading always makes profit is a myth.
Okay.
Yes, this is a loss also. The algo getting defunct, that's the major risk that you have, that everything can go wrong. It can go wrong for sure. Correct. So these are the two things that one has to keep in mind for the myths.
Okay. So you've really walked us through the ins and outs of algo trading, but I want to understand a little bit more about you. Can you tell us that apart from TMT and typing in all of this and working with algo trading and technology, what is it that you enjoy doing? Do you have a passion? Do you have anything that you while away your free time doing? Tell us.
So basically, since we are spending more time on the system, we would have more kind of interest spending on some of the social media, maybe learning on LinkedIn, reviewing more things, correct? So it's more the system based. But of course, traveling is one of the major hobby that I have.
Wonderful, and we hope that with all your successful algo trading that you can travel the world and explore more places. Thank you so much, because I think this episode has really been eye-opening. Not many people know what algo trading is, or many people associate it with certain things. You've really given us a deeper insight into how technology is leveraging it, the India story, the regulatory framework, advantages, disadvantages, and so much more. So thank you so much for that.
Thank you for inviting me.
Okay, and with that, we've certainly gotten ourselves a lot more wise and knowledgeable about algo trading. I hope you enjoyed watching this episode. Do remember to subscribe to Money TV. Do remember to share and comment on this video. With that, we'll wrap it up on this episode. Thank you so much for watching.